Latest Singapore 6 months T-bill offers 3.34% cut-off yield only. This is actually down from the previous issue, which had 3.4% cut-off yield. That was on 1st of August. Now, why have rates actually came down so sharply? Recently, there's been news that US has seen bad jobs numbers, and there's actually some risk of recession coming in 2025. Therefore, US 6 months Treasury itself has fallen quite sharply in the last few weeks. Reading on to the article, demand has actually fell from the latest tranche, and total applications for auctions was at $16 billion. Actually, when I see this, to me the demand still looks pretty strong, but the question now beats, where would investors next look to get some returns on their cash? Let me help you with a quick summary. If you have 20,000 or less, why not try Chocolate Finance? I'll leave my referral links below to them and I'll get a sign up bonus, so thank you in advance. Right now, Chocolate Finance provides you 4.2% for the first 20,000 and it's actually guaranteed by them. Or you can actually check out Extra 8 Bond, which is now traded on the market. Not investment advice. This is one of the few retail bonds that I think is worth to explore. At current price, the yield is around 3.8% because the bond is right now at a premium. I've actually bidded for Extra 8 when it was in IPO mode. I've actually flipped it away for a few $100, something I've shared in my Telegram group. If you're keen to join my Telegram group, look for links below too. Then what about if you have big amounts? Why not explore wholesale bonds? Wholesale bond means you trade in 250,000 per piece. And one idea could be this by Fraser's Property. The bond will mature around 1.5 years time, and the yield right now is about 3.8%. How about more ideas? If you have followed this channel, you kind of know I've been suggesting that REITs are cheap. You can get 5 to 7% dividend yield quite easily right now. Escort Trust, for example, gives you 7.6%. What I own right now, I highlight in green. You can take a look. Not investment advice. And what I also think is good, I also highlight in blue. Some of you prefer investing in banks. Some of you prefer investing into properties. I still think investing is better than keeping cash, and all of them can work. But I do think that the one that I would say to be very cautious when you try to generate returns in a future low interest world is this idea of options trading. A lot of advertisements are running right now that options can generate you cash flow and is a superior method of investing. And I've actually found a very interesting post from a trader. There are 3 certainties in life: death, taxes, and derivative strategies being misrepresented to investors. If you haven't heard of options too much, there are actually strategies such as covered call strategy that lets you earn a premium on a stock that you own. That's because you sell the option that someone can buy your stock at a targeted price. As mentioned, this strategy limits the gain on a market rally because when price goes up, your stock will get sold away, and a large loss when markets decline. The small little premium that you receive is definitely not going to cover the paper loss you see on the stock that you hold. When you sell options, including covered calls, you're actually making a bet about future volatility. Whether the trade is profitable depends on whether your judgment is correct. You're being compensated for taking risks and you're not simply earning income. So again, when we go to a future whereby there's less interest returns, don't look to this avenue to provide you passive income. It's not. It's simply making investments more complicated. That's why I don't advocate for options trading on this channel. Then there are other solutions along this line for a lazy investor. One of them is actually to buy a covered call ETF, which is basically an actively managed fund that does the selling call options on your behalf. As you can see in this table, since the market crash of 2022, there has been a lot of money going into such ETFs. One of them is actually JEPI, JP Morgan Equity Premium Income ETF. I've mapped this against SPY, which is S&P 500. You would see that the yellow line outperforms massively over the blue line, correct? When markets rally hard, such covered call strategies underperform. And when there's a fast market correction, you would see that they both dip very quickly. So let's prepare for a future whereby interest rates are lower. How about that? I have a few learning points for you today. The first is the idea of using CPFOA to buy T-bills for extra interest. Those days may be over soon. Now to this topic of CPF, smash the subscribe because on this channel, I cover a lot of times on savings ideas and CPF topics. And if these apply to you, subscribe to get notified when I release something for you and join our journey to reach 60,000 subscribers. Now let's recap a bit. CPFOA pays 2.5% in return, correct? So many have been investing their CPFOAs into T-bills. Previously, T-bills was 3.7, 3.9%. It can still work, but currently at 3.34%, and going downwards, this idea may not work anymore. The reason is because the calculation for your interest is based on the lowest figure of that month inside your CPFOA account. Which means when you move monies out and when the money comes in, there could be certain lag factor that actually affects the overall return you get moving your monies into T-bills. DBS has actually done a calculation which I'll use. Over here assumes the maximum 2 months lag time moving in and out of a T-bill using your CPFOA. You would see that the minimum cut-off yield based on the opportunity cost becomes 3.33%. With current 3.34%, you're actually not rewarded investing your CPFOA into T-bills anymore. Moving forward, such a move could actually be detrimental. The second learning point today is to think longer term. This is the chart for 6 months T-bills. You would see that it actually reached 4% plus in 2023, but has been steadily trending down. And this is a new 15-month low. What I would recommend is to lock in longer term interest rate already. Don't wait until 2025, whereby it's quite possible that T-bills will only offer 2+%. Then you start to move your monies to longer term ideas. Think back again, in 2021, at this red arrow over here, T-bills were only paying 0.34%. Who cared about T-bills back then? And that's why most of us have only got interested into T-bills in the last 1-2 years. That is why, if you have a wedding plan, or renovation plan, or car purchase that you want to budget for, DBS's online fixed deposit at 3.2% for 18 or 12 months actually look quite attractive. I do believe they could be reducing this pretty soon. The next is to lock in long-term returns. Look for short-term endowment plans. Sometimes they come to the markets for a quick period of time. Join my Telegram group because that's where I actually share ideas and opportunities. Buy the Singapore Savings Bond. I think now it's increasingly getting obvious that when you can lock in for 10 years an average of 3.1%, you are going to benefit long term. If you wait until T-bills rates start to come down, the Singapore Savings Bond rates will also come down. The reason is because US 10-year rates are also dropping. So right now, you can lock in 10-year rates at 3+%. And I do think that if we assume 2025 will be lower interest rate environment, locking this up for interest income definitely works. Closing date again for the upcoming September issue is on 27 August 9 PM. Last but not least, I'd like to offer a solution also, which is my cash portfolio. Over here, we've brought in more than 250,000 in the last few weeks. And this cash solution that I built for you has no lock-in periods, no hidden charges, and me and my assistants will be directly in touch with you. The minimum amounts that we're looking at is only 30,000, and I've declared the only charge, which is the platform fee, which is not something I earn. I'll also be providing you my monthly newsletter, which looks something like this. And if you click to get started, this is an example of portfolio that I can build for you. Let me help you make suggestions how to manage your cash and also guide you towards investing properly into equities for the long term. As always, look for links below to get in touch. If you're keen to find out what are the best fixed deposit rates, check out this very popular video I had. With that, I'll sign off from here and see you there. Take care as always. Goodbye.